If you look at Islamic finance and ESG and focus on the factors from an ESG perspective, which is environment, social, and governance, I loosely translate those my own way into the 3P equation, which means environment can be translated as planet, social can be translated as people, and governance could be loosely translated as profit with and for a purpose. So with the lens of people, planet, and profit, it's very easy to look at Islamic and ESG, figure out that both of these streams are looking to work and deliver on these three fronts. Specifically, from an Islamic perspective, there are certain fundamentals they focus on. This is the just treatment of all people involved, or justice, transparency, empowerment of all stakeholders involved, ethical practices, and social responsibility. If you take them and bring them over to the ESG part, they're literally identical. That's exactly what ESG is looking at achieving. In Islamic, there is a practice of screening for exclusion. What does it mean? There are industries which need to be excluded from Islamic practices in Islamic portfolios, the likes of tobacco, alcohol, gambling, etc. If you look at the ESG part of things, there is this concept of negative screening, whereby portfolio managers and institutions, when they look at ESG criteria, they make sure that there are certain industries which are negatively screened and excluded from the portfolios because they do not come up to the ESG criteria themselves. Likewise, if you take it further and look at Islamic financial institutions, they look at achieving social and ethical benefits for the wider society beyond the pure concept of just getting pure returns. This corresponds squarely to the S factor of ESG, or the people factor of my 3P equation. If you look at the social related financial, like social bonds, they seek to achieve exactly the same social benefits. So like for like, there are multiple elements. You look at stakeholder empowerment and oversight. From an Islamic perspective, you have the additional layer from a G element, the governance element, whereby you have Sharia advisors and Sharia boards who monitor all what is being done from an Islamic banking and financing perspective, thus adding an additional layer of governance which provides even further comfort from an Islamic perspective. Exactly the same on ESG side. Governance has been in the highlight over the last few years because of multiple reasons, and I think there's more and more focus on that element from ESG perspective also. Looking at the way the market is shaping up and the industry is moving along, the outlook looks like there's an upward trend altogether. We have to look at the drivers behind what we believe is going to be the growth and convergence. So as I said, awareness for me, number one, awareness. There is going to be provisioning of more clarity, transparency, and enhanced data from an ESG perspective, utilization of that data and ratings coming through. You also could look at maturity of the legal and regulatory requirements and guidelines which exist and which are evolving. You fundamentally need to look at one more aspect which is extremely important. It's the rise of the relevant population within these ESG and Islamic affairs. You look at millennials from an Islamic perspective and from an ESG perspective also. They are going to drive much more demand in both these elements. And I think overall, the customer demand and expectation is much more enhanced than what it was earlier. Both of these sectors were not mainstream till a few years back. Islamic and ESG are becoming mainstream. When something becomes mainstream, you automatically are going to see growth. So in my opinion, the awareness, the demand, understanding beyond basic products, growth in the relevant population, participation of central banks, sovereigns, and another exciting phenomenon from Islamic perspective is, if you look at the Islamic growth of today, you would see it's not only just the Muslim population of the Islamic countries. In one of the GCC markets, 20 to 23% of the growth in retail mortgages from non-Muslim population. Likewise, if you look at the growth of sukuks, you would see Luxembourg issuing sukuks, Hong Kong issuing sukuks, UK issuing sukuks. Logically, why would these countries issue sukuks? Because there's a demand. So as I mentioned, the clients are pushing demand beyond that plain vanilla requirement, both from an ESG and Islamic perspective, which means they want the complete food chain to be served. And I think that's a massive driver for growth and outlook for these two industries.